If you want to increase your chance to succeed at trading, you must ally yourself with big players in the market. And how to do that? Using supply and demand. Supply zones are found when the market makes a large move down from the easier single candles or the small consolidation structures, also known as the base. Demand zones are found when the market makes a large moves again from the single candles or base. Drawing the supply and demand zones is simple. For a supply zone, you want to mark the area from the open of the last bullish candles before the drop, which creates the supply zone, and up to the most recent high before the drop. For a demand zone, you mark the area from the open to the last bearish candles before the drop, which creates a demand zone down the most recent before the up move. If you want to know more about how to find draw supply and demand zones, make sure you watch this video first. Now, here's the four types of supply and demand defined by how the price approach the supply and demand zone and how it leaves the zone again. I've grouped them into the continuations structures and reversal structures. Continuations price structures includes drop by drop and rely based rely patterns. Reversal price structures are drop based relies and relies based drop patterns. So let's analyze each of those structures one by one. Rely based relies. The rely based relies is a type of the demand zone which forms during the up move, being the continuations patterns. The market structure is very simple. In this example, you can see the first have a rally, then consolidations or the base, and finally another relay which creates the demand zone. A relay based relay will always from demand zone. It can never create a supply zone. Drop by drop. The drop by drop is exactly opposite of the release based release, which only similarly being they both from during trend movement. Drop based drop will always from the supply zone, a zone which if market returns should push the price back in the direction of the movement then created the zone. In this example, drop lower create the supply zone, so if the market will return to this zone, it should push the market lower. Now, the big questions, what creates drop based drop, rely based rely structures? Both zones from the market because of the bank traders, the token taken profits of existing trading positions. In this example, during the first rally, we had bank traders placing long trades. When the bank traders are in the profitable traders, they will want to secure some their profits. When they decide to do this, they consume all of the buy orders coming into the market from retail traders who have begun entering long trades due to the size of the relay. This consumptions of buy orders means the market makes a small move lower and creates the base of the potential demand zones. The move lower caused a large number of retail traders who went long in the relay higher. To close the trades loss, which puts a lot of the sell orders into the market. In addition to do this, there will be small numbers of the retail traders against the move down is the trend reversal, meaning they place sell trades which the expectations that the market is going to move lower. With these two sets of retail traders puts sell orders in the market, the banks now begin to buy again, knowing they will make the market move higher, and in the process cause anybody who sold the move to close their trades at a loss, which end up being the bank trades profit. For the drop-based drop structures, the exact same process takes place, only the other way around. The banks takes profit from the sell positions, which stops the market from falling Then, as the market begins to retrace against the trend, the retail traders who sold late into the down move close their trades at loss, and reversal traders begin placing buy trades because they think the trend is genuine. Both of these trades are putting the buy orders into the market. The banks start selling again at the supply zones, and all the trades who placed by the traders are now losing money. Drop-based rely. Drop-based rely is the structure which always forms a demand zone in the market. These zones differ from the first two price structures mainly because of their locations in the market. If relay-based relay and drop-based drop zone only forms during the trending movements, drop-based relay zones will only be found when the market change from moving to moving up. So its reversal pattern relay-based drop on the position sides of the scale. We have relay-based drop zones. These zones from when the market reverses from moving higher to moving lower, and when their constructions is complete. Supply zones will have formed the market which should cause the market to fall. Again, the reversal structures what creates relay-based drop, drop-based relay structures. The drop-based relays and relay-based drop zones are created by bank trading easier place trades to make the market reversal, or by taking profits off existing trading positions. Very important. The relay-based drop-based relay zones which forms when bank traders taking profits have a lower probability of the resulting in the successful trades that zone that are created because of the bank trades placing trades wanting to the market to reversal. To understand why, we must analyze and try to find the intention of the bank trades when they are placing trades. If the bank is placing trades in order to make other trades lose money, the area at which they have placed their trade is important, as they have the interest into keeping the market price from the break in the area. In supply and demand trading, this means when a relay-based drop or drop-based relay zones is created by a bank, traders placing trades waiting a reversal of the market. The bank must keep the market from the moving past to the point where they have entered their positions in the order to proceed the trades they have placed. In this example, we can see the drop-based relay after the market has been fallen. When the banks enter to their long trades, they consume all the sell orders coming into the market, and the price begins to rise, breaking the slight high found at the top of the last move lower. Soon after the break of the high, we see the large drop taking place in this drop cause a lot of the retail traders to start shorting, thinking the move higher was simply just a pullback to the downtrend. When the market comes into the contact with the demand zone, which has created by the first phase of buying, the banks buy again. If the banks didn't buy and the market fell below the demand zone, then they would be put a loss of their positions and would have to liquidate their buy trades. Of course, they highly unlikely for this to happen because the banks always make sure to plan their trades in advance. The main problem with the drop-based relay-based drop zone is determining if the zone has been created by banks placing trades to make people lose money or by taking profits of their own positions. To find out whether the zone you are looking at has been created due to the profit thinking. Profit token from the bank traders placing trades. This requires you to be able to understand the mechanism of where the supply or demand zone has formed in relations to the current trend on the time frame. You're observing the first place of market structure is a relay-based drop. is relay, the analyzing of the relays is which will give us a clue in figuring out for the reasons why the dawn has been created. The size of the candlesticks which form the right drop, along with understanding where the wick are on the candles, can give us majority of the information needed to find out why dawn has been created. Check out the relay which took place at the end of this down move. This move up most likely occurred due the professional trades placing by trades. The way I can determine this is by looking at the previous moves up in the downtrend. It's all about previous price actions. None of the previous up moves against the trend moved up in the strong manager. The bullish candles were either small or out, which present on the top of the candles, which shows us some of was seeing selling even though market was moving higher. Each one of these moves were created by the bank trades taking profits of the sell profits. Now if we look up to the final up move, we can see that the rise was much greater in the size than the previous up moves. These candles were far greater in size than the bull candles from the previous upside. Remember this. The banks will only close the reversal when there are enough retail traders for them to make a lot of money off the appearance of the supply or demand zone when the market has only been moving in the same directions for the short length of the time means there won't be many retail traders entering trades. Therefore, the bank will not be able to make a lot of money if they close the market to retail, because only a small amount of the traders will be liquid their losing positions. There's another job-based relay zone. There's are two clues which made the structures as important area on the chart. The first was the relay on the zone. The candles which make up the retail will large bullish candles which pushed the market a large distance against the previous down move. The bull candles contains very little selling, meaning it's unlikely the banks were placing sell trades as the market retail higher. The second clue was to the fact that relay manager message is break the most recent slide high. If you plan to trade relay based drop based relay zones, the best place to advise I can give you is to make sure your zone you're trading breaks the recent slide high for drop based relay zones or the recent slide low for relay based drop zones. If the rise in the drop based relay breaks and old slide high, there is much higher chance the zone will result in your having a successful trade than if no slide high was broken. The same is true for relay based drop zones. If the drop pushes the market below the recent form slide low, there is the high probability of the zone to working out profitability. Now you know what to look for when drawing your supply and demand zones. In future videos I plan to show you how to stop the best supply and demand areas in the high probability ones, and I will reverse how to trade the bonuses or the recent of these areas. As always, if you learn something new and found value, we would like to show your support, subscribe to our channel and hit the bell to stay notified when we upload a new video. Until next time.